Want to boost your stock returns? With Margin, a $10,000 account can control $13,000 of stock. But it magnifies losses too. One bad move, margin call. Shortcut to big gains? Or fast track to wipeout? Watch the full video.
Our sixth thing, understanding margin investing. Gary, let's start. What is it? What do we need to know about it as a baseline?
So, Rob, I remember many years ago, I was talking with someone close to me who was day trading just enormous amounts of stock, like literally seven-figure trades. He was day trading all of this stuff. And he told me he was so excited because he discovered his brokerage had this thing called buying power. And I let him buy more than the money he had in his account. He's like, this is phenomenal. I'm like, okay, that you did not discover anything exciting or phenomenal. You're just borrowing money. You're just using leverage. Okay, let's unravel this for people. Let's use an example. Say an investor has $10,000 in their account, and let's say their broker has a 75% margin requirement. Now, for clarity, your broker is going to have a different margin requirement on each security individually. On some securities, they'll be 50%. On others, it'll be 100%, right? It's going to differ depending. But let's just use, a simplified version and say your broker has a 75% margin requirement on your $10,000 account. What that means is that investor's purchasing power can increase to $13,333, right? So you can basically get 1/3 more. You can take on larger positions. And if those positions increase in value, the investor would profit from the full $13,300 exposure. That would enhance your returns. But remember, you have to pay interest. On the other hand, if those stocks decrease in value, that loss is equally amplified. Okay, if the loss is great enough, that investor is going to receive a margin call, which forces them to either deposit more money or sell off assets to restore the account to the broker's required level. This is something that we talked about in last week's version of the 5 things, right? When we were talking about meme stocks, GameStop in particular, where the shorts just got destroyed because they had margin calls. Okay, now let's just talk about 3 hypothetical examples and how margin investing would affect your returns. Now, let's say in this hypothetical example, it's exactly what we said before. You got a $10,000 account, a 75% margin requirement, which means you could invest as much as $13,300 of different securities. Okay, if your return is positive, then that's a win. Instead of earning a positive return on $10,000, you'll be earning a positive return on more than $13,000. You will make more money. Great. Now, let's say your investment return is neutral, right? You don't make any money, you don't lose any money, but you have to pay interest on that extra $3,333. That interest expense means your returns are going to be a little bit lower, not awful, but it's going to cost you a little bit. But here's where you can really get crushed. That's if your returns are negative, because in that situation, you will lose money. You'll lose money on a larger pot of capital, right? Instead of losing money on $10,000 of capital, you'll lose money on $13,000 of capital, and you have to pay interest. So in a situation like this, what you want to do, it's okay to use margin for both long and short positions, but ultimately, what you want to do is realize that margin can get you higher returns. It's also powerful enough to wipe out your capital really quickly. Again, especially true if you're shorting meme stocks. The key thing here is that there are lots and lots of moving parts here. What you want to do is act like you have to make sure that you've done your research, right? Or subscribe to a firm that does their research. I know one that I'd recommend. But the point here is, if you're taking that much risk, you better know what you're doing. You have to know your investment thesis, your reasons for it. I wouldn't be doing stuff like this because a guy had a stock tip, right? You're taking on a lot of risk there. This isn't the area where you just want to whip it around because somebody in a chat group said, I like ticker XYZ. That's really dangerous. So if you're going to do this, it's okay to do, but just make sure you have research and that you know why you're taking these positions.
Gary, so my question, especially initially when I was introduced to margin investing, was the interest, right? So it was confusing, looks like, and even our chart, I would say, it looks like, hey, the only interest applies if it's neutral or negative in terms of the position and then the interest, right? Can you just talk about how that interest works? what that interest rate looks like, and then how it is factored in across wins, losses, and stuff in the middle.
Yeah, so first of all, what they told you is 100% not true. You have to pay interest on any money that you borrow. In this example, if you have $10,000 in your account and you want to invest $13,300, you are going to pay interest on the $3,300 that you've borrowed. So there's no way around that. Now, what the interest rate is will depend on your relationship with your brokerage account, with your prime broker. Obviously, the big hedge funds, they have favored terms. They can use more leverage and have lower interest rates. Life's not fair. I don't know what to tell you on that. It's just the way this stuff works. If you are an individual, make sure you check the margin rate, because I guarantee you it will be higher than the money you're earning on cash in your account. And I can tell you, like, as a personal example, I use margin that I want to have larger positions in some of the names that I like. Every now and then, somebody at my brokerage firm calls me and says, hey, I noticed you've got cash in your account. If you want, we can put that in a CD or buy treasury bonds for you, and you can earn a higher return. And I say, hey, guess what? I need that to cover margin. So if I were to take your course of action, maybe I'd earn 3, 4, 5%, but you're going to charge me, 8 to 12%. It's going to cost me money. Did you think about that? Like, oh, that's a good point. I didn't look at it. Why these guys don't or can't, I don't know. But if you get that phone call, make sure you know, make sure you understand that whatever interest you are paying your bank, your brokerage firm, your prime broker is going to be higher than the rate that they pay you on your cash balances. So if you're going to do this, make sure you know your investment thesis very carefully. Make sure you know what you're doing in terms of have an investment plan. Know why you're investing. Don't do this just on a tip, and know what the rates are. And if you don't know or it's confusing, just call your brokerage firm. They'll tell you, or it's published somewhere. It'll be, on your account. This is not information they're allowed to hide from you. If you call and you don't get a straight answer or an accurate answer, then you need to change. Do not stay at a place that won't give you a straightforward answer on stuff like this. This is basic information. You deserve to have it. If you're going to use margin, you should know what you're paying.
That's why those guys get paid the big bucks, Gary. That's why.
Yeah.
That's why. So that concludes this week's version of the 5 things to know in investing this week. My name is Rob Farian, CEO, founder of Flying V Group. Gary Brode, always a pleasure doing this with you. Gary's managing partner of Deep Knowledge Investing. If you weren't with us at the beginning of the show, again, we'll be doing this every week. Trying to get Mondays, 6:30 a.m. I think is what we've been talking about. Maybe throwing that around, get that out for the opening bell to kick off the week would be a lot of fun. Head over to our website, as we mentioned, deepknowledgeinvesting.com. Sign up for a free subscription. That'll get you access to email list, all of the content that does go out. Some of that will be gated. You can unlock that content with a premium subscription, $100 a month.